Hello friends, welcome to my channel. This is CA Rakhi Agarwal. Today's topic is related to intangible asset, that is Indian Accounting Standard 38 Part 2. In previous discussion on intangible asset, we had discussed about the objective of this standard, then the scope of this standard, then the definition of intangible asset, then the initial recognition, then recognition and measurement principles. Then we had discussed on deferment of credit payments. Then we had discussed on the mode of acquisition of intangible asset, like in which form we had acquired the intangible asset, like whether in the form of business combination, the form of government grants, in the form of exchange of assets, in the form of separate criteria. It is an internally generated intangible asset. So we had discussed in all this in the last discussion. In today's discussion, we continue our discussion on the mode of acquisition, which is left, that is the internally generated intangible assets. So let's start our discussion with internally generated intangible asset. Internally generated intangible asset is the that kind of intangible asset which is generated by the organization internally, because it is not fulfilling the criteria, the definition of identifiable intangible asset. So it is not recognized in the books, because it is not fulfilling the criteria of identifiable, separability criteria, or having any legal rights or contractual rights. So internally generated goodwill is not recognized in the book. This internally generated goodwill is segregated into two phases, that is on research phase and development phase. Research phase is that phase of internally generated intangible asset in which the entity should acquire knowledge. Means they spend more or time on research by doing various alternative permutation, by applying various permutation and combinations. So research phase is that phase. At that time they acquire more or more knowledge, and whatever the expense they spent on the research phase, because if the research phase is not certain, the expense is on various alternatives. So these kind of expenses is to be charged to profit and loss account. It should not be capitalized. So the amount spent in research phase is charged to PL account directly. It should not be capitalized. So research phase is the phase where company should have various alternatives and busy in finding knowledge, in acquiring knowledge. But they are not, the company is not certain whether this knowledge, whatever they are acquiring, is they will apply on development phase or not. So certainty is not there. So that application of knowledge which they generate during the research phase is the development phase. So whatever they generate in the research phase, the knowledge which they generate at the time of research, they will apply in the at the time of development. Development phase starts when the research phase ends. Whatever the expenses they spent on the development phase is to be capitalized, because they apply the knowledge which they acquire at the time of research phase. So expense incurred at the time of research phase is to be charged to P&L, but the expense incurred or they have spent the amount on the development phase is to be capitalized with the intangible asset. Now the question, suppose one company has prepared one motion picture which the government has banned that picture, not to publish that picture. So they had a technical feasibility, they crossed the technical feasibility condition, they had intention to, they had already completed that motion picture, but they are not able to sell or use that in motion picture. So there is a technical feasibility is present. Intention to complete the asset, intangible asset is present, but ability to use or sell is not present. So if the condition is not fulfilled, then it is not said that it's a development phase. Then all the expenses is treated as a research phase and charged to P&L. Full In order to recognize the expense as, or in order to capitalize this expense, the condition of development phase is to be fulfilled. So first condition is technical feasibility, the second condition is intention to complete the intangible asset and use or sell it, or ability to use. The third condition is ability to use or sell the intangible asset. They have the ability to generate the future economic benefit. The future economic benefit from that intangible asset is probable. So if probability is there that they will generate the future economic benefit, then they will that expense is to be capitalized. Then ability to measure the expenditure, whatever the expenditure is attributable to intangible asset, they are ability to measure that and allocate technical, financial and other resources to complete the development phase. So these are the conditions. If these conditions met, then only the entity will able to capitalize the intangible cost at the development phase. Now, internally generated intangible asset, if the entity is not able to distinguish the amount spent on research phase or development phase, then whatever the expenditure they incurred, treat it as a research phase and all the expenses is to be charged to P&L. So if they will not able to distinguish between the research and development phase, and the development phase condition is not fulfilling, then all the expenses is to be charged to P&L by treating it as a research fees. Now, internally generated goodwill should not be recognized, as I said earlier, that it should not be recognized as an intangible asset because it is not fulfilling the definition of identifiable asset, intangible asset, because it is not fulfilling because there is two conditions like separation criteria and contractual or legal enforcement rights. So they are not fulfilling that condition. So it should not be recognized internally generated intangible. The recognition and measurements of internally generated intangible asset at the development phase, how the company entity will recognize the internally generated intangible asset at the time of development phase. Firstly, the condition is required to be fulfilled. If the condition is fulfilled, then it should be capitalized. The cost of internally generated intangible asset is the sum of expenditure incurred from the date when the intangible asset meets the recognition criteria. Means these six criteria which we have discussed, that is technical feasibility is there, future economic benefit is probable, then ability to use or sell the intangible asset, the management has the intention to complete the intangible asset, then only the company will able to recognize or capitalize the internally generated intangible asset. If the expenditure is booked in the previous year, then that expense should not be capitalized or restated because it is not said in the standard that once they had recognized that expense in the P&L, they will not be able to capitalize that or restate that expense in the current year. So it is not allowed in the standard to restate that expense which is once charged to P&L. Capitalization is not allowed if the internally generated goodwill is there, brand name is there, newspaper masthead, and customer list is there. If they are internally generated, then that is to be not be capitalized because they are not fulfilling the definition of identifiable asset. If it does not meet the recognize, if this recognition criteria of development phase, if they are not able to meet that criteria, then automatically it is treated as a research phase and it should be charged to P&L and not to be capitalized. And cost which is already expensed off is not allowed to be capitalized. The cost which is already expensed off in last year or which is already charged to P&L, that cost is not recognized or not allowed to be capitalized in the current year. Whatever we had discussed is to be explained with the help of example. Like Sun Limited has been developing a new production process of formulas of COVID vaccine. Research phase is started from 1st April 21 to 31st October 2021 and amount spent on it is rupees 50 lakhs. On 1st November 2021, it is demonstrated that Sun Limited has a technical feasibility about the production process and amount spent of rupees 58 lakhs. So that is the research phase and this is the development phase. They are fulfilling the recognition criteria of the development phase. That is, if all the criteria is not said in example, but there is some criteria it is explained, but there is means they have said some of the criteria, so it is assumed that from this date the development phase is to be started. And on 31st March 2022, it is estimated that the recoverable amount of formula of COVID vaccine amounting to rupees 56 lakhs. So Sun Limited should expense of rupees 50 lakhs to P&L account because that expense is related to research phase and all the expenses which is expense of at the time of research is to be charged to P&L account. As the company meet the recognition criteria, because there is a technical feasibility is there. So from 1st November 2021 to 31st March, the amount spent is rupees 58 lakhs, which is to be capitalized. As on 31st March 2022, the recoverable amount is given in the question, which is rupees 56 lakh. So as we say that the carrying amount is 58 lakhs and recoverable amount is 56 lakhs. As per Ind AS 36, it is said that the recoverable amount is less than carrying amount. So there is an impairment loss of 2 lakhs. So it should be charged to P&L. The amount rupees 2 lakhs is to be charged to P&L and intangible asset is to be restated by rupees 56 lakhs because 2 lakhs is to be impaired and charged to P&L as impairment loss. This is the illustration. Then we will discuss about the subsequent measurement. There are two accounting policy that the company can select to restate its intangible asset, like cost model or revaluation model. So there are two accounting policies in case of intangible asset. First is cost model and second is revaluation model. Either the company can select, the company has an option that they will select either the cost model or revaluation model as its accounting policy. Accounting policy should be applied to the whole class of intangible asset and not merely on individual asset. Like there is a copyright, there is a patent, there is a brand. So it's applied brand 1, brand 2, brand 3, brand 4. So this is the whole class of asset. So if any policy, if any accounting policy, the entity should adapt. So it will be adapted to apply to whole class of the asset, not in an individual asset. Like if they will apply on patent, there are four patents are there: patent 1, patent 2, patent 3, patent 4. If they are select the cost model in patent 1, then they are required to select the cost model in patent 2, patent 3 and patent 4. But if they are applying brand 1, brand 2, if there is brand 1, brand 2, brand 3, brand 4, they are selecting a revaluation model in brand 1, then they need to select revaluation model in brand 2, brand 3, brand 4. It is not possible that they will select in brand 1 revaluation model, and in brand 2 they will apply cost model. It is not allowed as per standard. So whatever the policy they will adapting, they will apply to the whole class of asset and not merely on the individual asset within a class. So class of asset means grouping of similar assets, similar kind of asset. Like in brand 1 they will apply revaluation model, and brand 2 they will apply cost model. It is not possible. So class of asset means grouping of similar asset having same nature and use in the entity's operation. Now calculation of carrying value of intangible asset subsequent to the date of initial recognition by using cost. If they are applying the cost model, how they will determine the carrying amount of intangible asset on the subsequent date. Subsequent date means on the reporting date. At the every year, how the company will make the treatment. The cost of asset, whatever the cost of asset they will recognize in the initial recognition. Now at the end of year they will make amortization. They will make an accumulated they will charge some amortization on the cost of the asset. Then if any impairment loss is there, they will reduce that impairment loss from the cost of asset. Things is to be done at every year, that is subsequent date, that is cost of asset uh, is reduced by the accumulated amortization, is reduced by accumulated impairment loss if any. Then they will find out the carrying amount of intangible asset in case of cost model. But if the company is applying revaluation model, is following the revaluation model, then how they will determine the cost. After initial recognition, intangible asset to be carried at revalued amount, being a fair value at the revaluation date. And revalued amount means the amount is to be determined at a fair value on the revaluation date. So revalued amount on the date of revaluation means it should be recognized at fair value. If any accumulated subsequent accumulated amortization is there, should be reduced, and subsequent accumulated impairment loss, it should be reduced. Then the carrying amount means in case of revaluation model, fair value is to be taken into consideration, and in case of cost model, cost of asset is to be taken. And if the single item of intangible asset is revalued, if one asset is revalued, then the entire class of that if the patent one the company is applying revaluation model, then all the patent the company is having used to apply revaluation model on that. So if single item of intangible asset is revalued, the entire class of intangible asset to which the item belongs should be revalued. So for revaluation under Ind AS 38, fair value shall be determined by reference to the active market. Whatever the market is, the fair value is determined accordingly. Now, frequency of revaluation model. How frequent they will revalue? The entity should revalue the intangible asset. Valuation of intangible asset need to be performed every year or in every reporting period if major volatility is there in the fair value of the asset and the change is significant. If the volatility is high in the value of the asset, in the fair value of the asset, and the change is very significant, then the entity should perform revaluation every year or in every reporting period. But the volatility, if the volatility of that asset is less, if the volatility is not there in the fair value of the asset, then it should be performed in every 3 to 5 years. Revaluation is to be done in at an interval of 3 to 5 years. So, if the volatility is high in the fair value of the asset, then it should be performed every year. Revaluation is to be done every year. If the volatility is low, then it should be revalued at every interval of 3 to 5 years. It should be performed at sufficient regularity so that the carrying amount does not differ materially with the fair value of the asset. So the revaluation is to be performed in such a way that the carrying amount of the asset does not differ, materially does not differ with the fair value of the asset. So that's why the revaluation is to be done, because if if there is a major difference between the carrying value and fair value, in order to reduce that difference, revaluation is required to be done. Treatment of revaluation gain or loss. In if the company is doing revaluation, then if any gain or loss is generated due to revaluation, then how the company will treat that gain or loss in the books is guided by this standard. If first time increase in the value of asset, if there is a first time increase in the value of asset, suppose the initial at the initial recognition, the entity should recognize at 50 lakhs, and at the end of the company has made a revaluation and the amount of that asset increased to 60 lakhs. So at initial recognition they had recognized as 50 lakhs, but at the reporting period when they had revalued that asset, it becomes 60 lakhs. So it create a revaluation surplus because there is an increase in the value of asset. But if the same asset subsequently the value of that asset decrease, then up to that extent the revaluation reserve is to be created. It should be adjusted with the decrease amount, and if any remaining balance is there, it should be. So in our previous example we had created a revaluation surplus of 10 lakhs. Suppose subsequently there is a decrease of in the value of asset to 20 lakhs. So previously we had created uh, revaluation surplus of 10 lakhs, and we had made an intangible asset to 60 lakhs. Now we had there is a subsequent decrease in the value of asset, so by 20 lakhs. So firstly we will adjust that 10 lakhs with the revaluation surplus which we had created earlier, and remaining 10 lakhs is to be charged to P&L. So balance sheet is also restated by 40 lakhs, that is intangible asset 40 lakhs, and 10 lakhs is to be adjusted with the valuation surplus which we had created earlier, and remaining 10 lakhs is to be charged to P&L. So this is to be explained by example. Suppose airport landing right is purchased on 1st April 2021 at rupees 40 lakhs. On 31st March 2022, the fair value of airport landing right is 50 lakhs. On 31st March 2023, fair value of airport landing right is 38 lakhs. Because of high frequency in the value of the asset, the company opt for revaluation model. Because there is a frequency is high, so the company has opt for reval revaluation model. So how the company will recognize? At the initial recognition, that is on 1st April 2021, the intangible asset, that is airport landing right intangible asset account debit to bank account, that is rupees 40 lakhs on the date of purchase of that asset. At the subsequent recognition, the company apply a revaluation model. Company choose to apply revaluation model. So as on 31st March 2022, the fair value of the asset is increased by rupees 50 lakhs, that is from 40 to 50 lakhs. It increased by rupees 10 lakhs. So it becomes 50 lakhs. So balance sheet is to be restated by 50 lakhs, and the entry will be airport landing right intangible asset, that to revaluation surplus OCI 10 lakhs. So it should be revalued by 10 lakhs. So airport landing right is to be increased by 10 lakhs, and that 10 lakhs is to be transferred to revaluation surplus account. On 31st March 2023, the fair value of landing right is to be rupees 38 lakhs. That is, it means it is decreased by 38 lakhs. So there is a decrease in from 50 to 38 lakhs, decrease of 12 lakhs. So firstly, we will adjust that 12 lakhs with the revaluation surplus which he had created earlier, that is revaluation surplus account debit 10 lakhs, because we had created 10 lakhs up to that extent. We will adjust that decrease in the value of the asset, and remaining 2 lakhs is to be charged to P&L as a impairment loss. To revaluation surplus account debit 10 lakhs, PL account impairment loss account debit 2 lakhs to airport landing right. So it is reduced by 12 lakhs. Airport landing right intangible asset is reduced by 12 lakhs, and it becomes restated with by 38 lakhs in the balance sheet. Now, treatment of revaluation gain or loss. If there is a first time decrease in the value of asset, then what we if the company has firstly they had recognized and there is a decrease in the value of the asset, then should be charged to P&L as an impairment loss. If the same asset subsequently increase, then firstly we will adjust with the PL account to the extent of earlier debit, means we will reverse the impairment loss, and if any remaining balance is there, we will adjust with revaluation surplus. We will recognize in the revaluation surplus. If the same asset subsequently again it will be decreased, then it will be charged to P&L as an impairment. It means if previously we had created an impairment loss, and there is a again there is a revaluation surplus, so up to that extent we had created an impairment loss, we will adjust that amount, and if there is remaining balance left, it should be transferred to revaluation surplus account OCI. So this is to be explained by example. Airport landing right is purchased on 1st April 2021 is rupees 40 lakhs. On 31st March 2022, fair value of the airport landing right is rupees 38 lakhs, and 31st March 2023 fair value of airport landing right is 44 lakhs. Because of high frequency, the company has opted for evaluation model. At initial recognition, the accounting entry will be as on 1st April 2022. The company has purchased the airport landing right. On that day, the company has passed airport landing right intangible asset account debit to bank account, that is rupees 40 lakhs. At subsequent date, the company has opt for evaluation model, and they had the fair value of that asset on that date on 31st March 2022 it becomes 38 lakhs. That is, there is an impairment loss because it is reduced from 40 to 38 lakhs. So the company will book impairment loss, that is PL account debit, impairment loss account debit to airport landing right intangible asset by rupees 2 lakhs, because there is a decrease in the value of asset from 40 to 38 lakhs. So 2 lakhs is to be impaired. Again, on 31st March 2022, the fair value of airport landing right becomes 44 lakhs. So it become increased from 38 to 48 lakhs. So airport landing right is to be increased by 6 lakhs. So 6 lakhs is to be debited, and we will adjust with the impairment loss which was created earlier to the extent, that is 2 lakhs. Up to 2 lakhs we will adjust with PL impairment loss, and remaining is to be transferred to revaluation surplus OCI 4 lakhs. So airport landing right intangible asset account debit 6 lakhs to PL impairment loss which we had created earlier 2 lakhs to revaluation surplus credit 4 lakhs. Now utilization of revaluation surplus. If at the end of means at the end of the useful life of that asset, or if there is a disposal, at the time of disposal of that asset, how the company will use the revaluation surplus if remain in the balance sheet. If the asset is disposed of, then what the company will do with the revaluation surplus? If there is a remaining balance in revaluation surplus, an intangible asset is sold off, if the intangible asset is sold off and there is remaining balance in the revaluation surplus in relation to intangible asset which is sold off, then what the company will do? The company will uh, transfer that revaluation surplus to the reserve account, retain earning, to the retain earning, and treat it as a distributable reserve. It's a mandatory treatment guided by this standard, guided by the by accounting standard, that any balance remain in the revaluation surplus in case of the asset which is sold off, intangible asset which is sold off, which is not in the balance sheet, but the revaluation surplus balance is there in the balance sheet, then that balance is to be transferred to retain earning. It is a mandatory process to transfer that revaluation surplus to retain earning and treat it as a distributable reserve. And the accounting entry at the time of transferring, that is evaluation surplus account debit to retain earning, because all the surplus which is remain in the balance related to intangible asset which is sold off is to be transferred to retain earning. And in case if the useful life of that asset transferred to retain earning during the life cycle of the asset, when the intangible asset is in use, every year evaluation surplus is transferred to the retain earning to the extent of additional amortization. To the extent of amortization, additional amortization means amortization on revalued cost of the asset minus amortization on original cost of the intangible asset. So if whatever the revalued cost is there, the amortization on revalue, firstly we will find out the amortization on revalued cost, and then we will find out the amortization on original cost, and the difference is to be transferred, and that difference is to be transferred from revaluation surplus to retain earning during the life cycle of the asset. This is to be explained by example. Suppose cost of intangible asset as on 31st March 2022 is 20 lakhs, and life of that asset is, useful life of that asset is 10 years. Now the revalued cost of intangible asset as on 31st March 2023 is 40 lakhs. Amortization on original cost of intangible asset is 2 lakhs, and amortization on revalued cost of intangible asset is 4 lakhs. So differentiation is 2 lakhs. That 2 lakhs is to be transferred during the life cycle of the asset uh, to the retained earning, and not transferred to PL account. So it should be 2 lakhs is to be transferred to amortization account, and 2 lakhs is to be transferred to retained earning. So transferred from revaluation surplus to retained earning are not made through profit and loss. Useful life, that is contractual or other legal rights. Useful life of intangible asset arises from contractual or other legal rights. Suppose this is to be explained by example. Suppose there is an entity, and government has provided a mining right to that entity, and the useful life of that contract is 10 years, but the economic benefit from that intangible asset, an entity able to derive an economic benefit from that intangible asset is about 7 years. So actually the useful life from which the entity is expected to generate the economic benefit, future economic benefit, is 7 years. So it's not that the useful life of that asset according to the contractual may be higher, but the actual useful life from which the entity will derive the future economic benefit is 7 years, that is lesser than the contractual right. So it may happen that the useful life is actually the 7 years, not the 10 years, because the future economic benefit from that right is 7 years. It may be shorter than 10 years, but not more than 10 years. Shall not exceed the period of contractual or other legal rights. Means the period which is stated in contract, it is not exceeded that period, but it may be lesser than that. So shall not exceed the period of contractual or other legal rights, but may be shorter depending on the period over which the entity expect to use the asset. Means suppose I am taking the example of 7 years and 10 years. The contractual or legal right is 10 years, but the entity is able to use that asset, expect to generate future economic benefit from that asset is 7 years. So actually it may be shorter than the period depending upon the situation. So useful life may be the contractual or legal rights, or it may be shorter than that, according to the future economic benefit derived from that asset. So, useful life and renewal, useful life can include the renewal period only if there is an evidence to support renewable by the entity without significant cost. So it may be renewed only if it will be if there is an evidence that renewal is possible, then only they can renew the useful life of the asset. And there are two type of useful life of intangible asset. That is, one is a finite life and one is indefinite. That is infinite life. That is indefinite life. Finite life means, so in case of finite life, amortization is possible because life is certain. Life of that intangible asset is certain or determinable. But in case of indefinite life, the life of the asset is not certain because the entity itself don't know the life of the asset. So how they will amortize that asset, because denomination is not there. So it is not possible to amortize that asset. Entity does not foresee the future economic benefit will be available for how many years, because the period is not certain. So amortization is not possible. But in case if the amortization is not possible for indefinite life of the asset, the entity will not be able to amortize that asset, but they will do the impairment testing. It is a mandatory requirement of this standard that they will do the impairment testing at least once in a year if the life of the asset is indefinite and amortization is not possible for that asset. So mandatory impairment testing is required at least once in a year. Entity will review every year if the life is written. And one more thing, they will review every year whether that indefinite life will converted into finite life. If it is possible to determine the useful life of that asset, then only it will be amortized. So review is required every year in order to find the life of the asset. Amortization is the other name of depreciation. Depreciation is in case of tangible asset, and amortization is in case of intangible assets. So, if amortization, yeah, is only possible if the life is certain, if the life of the asset is finite, then only amortization is possible. Allocation of amortized amount. Meaning of amortization is means is a systematic allocation of the amount of the intangible asset over the finite useful life of the asset on a systematic basis. So it's an allocation of amortized amount of intangible asset with a finite useful life on a systematic basis over its useful life. Now it's begin with when the asset is available for use, put to use, when the asset is means seized, is seized when earlier of the date when the asset is classified as held for sale, whichever is earlier, or asset is de-recognized, actually sold. Now, some of the important points related to the amortization. That amortization method may be there are three methods of amortization, that is diminishing balancing method, that is WDV method, straight line method, and unit of production method. As we had discussed the same thing in case of fixed asset, that is for PPE, in India 16, that is there is a three method of depreciation, that is WDV, straight line, and unit of production method. The same thing happen in case of intangible asset, that is straight line method is what it depend on the consumption pattern of the asset, and it is constant. Depend on the consumption pattern, which is constant every year, uh, and it is consistent. When the future economic benefit is consistent and consumption pattern is constant, then straight line method is required to be used for amortization purpose. And in case of when diminishing method, balancing method is used when the future economic benefit has in decreasing trend, like, and the consumption pattern is in diminishing nature, because as we are using that asset, the consumption pattern goes on decreasing. So WDV method is used for that, and unit of production method is used when it's based on the usage of the asset. Based on how many unit it the from the use of asset is to be required to be produced. So future economic benefit is on the basis of usage, up to how much usage with the use of that asset the unit is going to be produced. And the consumption pattern is also on the basis of the usage. Change in amortization method is considered as change in accounting estimate and applied prospectively. Means, if there is a change in amortization method, it is treated as a change in estimate, not as a change in policy, because amortization method is a kind of estimate, and it is applied prospectively, not retrospectively. So it's a changing, if company apply for change in amortization method from SLM to WDV, it will be considered as a change in accounting estimate and not a change in accounting policy. Now, the amortization method used shall reflect the pattern in which the asset future economic benefit are expected to be consumed by the entity. Means it reflects the pattern in which the future economic benefit are expected to be consumed by the entity. Accordingly, they will select the amortization method. If the pattern cannot be determined reliably, means you do not know the which pattern the entity is able to consume that asset, means whether the consumption pattern is constant or not, it is in diminishing nature, or if the entity is not able to determine the pattern, consumption pattern, then straight line method is to be used. Amortization charges for each period shall be recognized, means amortization cost is to be recognized every year in the PL account, unless this or another standard permits or require it to be included in the carrying amount of the another asset. So it is should be amortized in the recognized in PL every year, unless there is a separate standard which permits to include that carrying in the value of the another asset. Amortization period and amortization method shall be reviewed at least at each financial year, means it shall be reviewed or at every financial year. At the end of every financial year, the method and period both, it should be reviewed which method is straight line WDV or the production unit production method, or period means useful life of the asset. So it should be reviewed every year in each financial year. And if The expected useful life of the asset is different from the estimates. The amortization period shall be changed accordingly. Means uh, this states that the estimated useful life of that asset is 10 years. But the expected useful life of that asset is suppose uh, 8 years. Amortization period shall be changed accordingly. Such change can be accounted for as a change in accounting. If any change in the useful life of the asset, it should be useful life of the asset or the method applied. If there is a change in method, all the changes is accounted for as a change in estimate and not a change in policy. This is to be explained via example. Suppose Moon Limited engage in the business of manufacturing chemical, entered into a technical collaboration agreement with a foreign company. Sun Limited means Moon Limited engage in the business of manufacturing chemicals. They are engaged in the business of manufacturing chemicals, entered into a technical collaboration agreement with a foreign company, that is Sun Limited. As a result, Sun Limited would provide the technical know-how enabling Moon Limited to manufacture chemical in a more efficient way. Moon Limited paid rupees 20 crores for use of know-how for a period of 5 years. Moon Limited estimates the production of chemical as follow. So in year 1 the production is done is 60,000 in metric tons, in year 2 80,000 metric ton, year 3 1 lakh metric ton, year 4 1,20,000 metric ton, and year 5 1,40,000 metric ton. At the end of first year, it achieved the targeted production, that is 60,000 is to be achieved, and at the end of second year 75,000 metric ton of chemical were being manufactured, because the estimated production is 80,000, but actually they had produced 75,000 metric tons. And Moon Limited considered to revise the estimates for the next 3 years, because they are required to revise the estimation for the next 3 years. The revised figure are 90,000 metric ton, 1,10,000 metric ton, 1,30,000 metric ton for 3, 4, and 5 years respectively. How will Moon Limited amortize the technical know-how fees as per Ind AS 38? So, as they had amortized, they had revised their production from at the end of year 2. So, firstly, we will know the amount of know-how required to be amortized is 20 crores, and unit of production method is used for amortization purpose, because unit wise it was given in the question that all the amount is, it will be the amount know how is amortized over the unit of production method. So initially estimate is year 1 60,000, year 2 80,000, year 3 1 lakh, year 4 1,20,000, year 5 1,40,000. Total estimate, initial estimate is 5 lakhs. Actually they produce in year 1 they will produce 60,000 as they achieve the target in year 1, and in year 2 they had actually produced the 75,000 units. The initial estimate is 80,000, but actually they produced the 75,000. At the end of year 2 they had revised the estimate. So at the end of year 2 the revised estimate is year 1 they had achieved the targeted production, year 2 75,000 is the actual production which they had done, and in year 3 90,000, year 4 1,10,000, year 5 1,30,000. So total will be 4,05,000. As they had revised the estimate in at the end of year 2, so year 2 is also considered, actual production is taken into consideration, amortization. So the amount of know-how required to be amortized is 20 crores. Unit of production method is used for amortization purpose, and in year 1 the cost of know-how at the beginning of the year is 20 crores, and the unit produced is 60,000 unit, and which is the actual targeted production, and amortization is 20 crores divided by 5 lakh. That is the total estimate, initial estimate into actual production, that is 60,000. So the amortized amount will be 2 crore 40 lakhs, and the carrying amount will be 17 crore 60 lakhs, which is the closing carrying amount of the know-how. And the opening value at the beginning of the year 2 will be 17 crore 60 lakhs, and the production year 2 will be 75,000, and amortization is on the basis of revised estimates at the end of year 2, because revision is there is a revision in the estimate at the end of year 2. So the total estimate at the end of year at the revised estimate will be 4 lakh 5,000, and actual production at year 2 will be 75,000. Amortization is on the basis of revised estimate. So 17 crore 60 lakhs divided by 4 lakh 5,000, that is the revised estimate, into 75,000, that is actual production at the end of year 2, and the amortization amount will be 3 crores 25 lakh 92,593, and the carrying amount at the end of year 2 will be 14 crore 34 lakhs 7,407. Now, at the end of year 2, there is a revised estimate. Now, amortizing on the basis of estimate, because it is not, there is no actual production, but there is an estimate. So, on year 3, 4, 5, the know how balance we are taking the year 2 beginning balance 17 crore 60 lakhs for amortization purpose, because it's a provisional amortization, not the actual. In the year 3, there's the carrying a cost of know-how, or the carrying amount of know-how at the beginning of, we are taking in the beginning of 2 year second year value cost, that is 17 crore 60 lakhs for amortization purpose on estimated basis. So production is 90,000, which is an estimated production, and amortization is on the basis of estimation. So 17 crore 60 lakhs is to be amortized on the basis of revised, total revised estimate, that is 4 lakh 5,000 into 90,000. So 3 crore 91 lakh 11,101 is the amortized amount. And in the 4 year, in the same way, we will amortize on the basis of estimated production, revised estimated production, that is 70 crore 60 lakhs is to be divided by 4 lakh 5,000 into 1 lakh 10,000 units. So the amortized value will be 4 crore 78 lakhs 2,469, and year 5, that is 17 crore 60 lakhs is to be, and the production will be 1 lakh 30,000. So amortization amount will be 17 crore 60 lakhs divided by 4 lakh 5,000 into 1 lakh 30,000, which give rise to 5 crore 64 lakhs 93,827. So the total as amortization amount will be 20 crores. So in this way we will amortize indefinite useful life. An intangible asset with an indefinite useful life shall not be amortized. An entity is required to test for impairment by comparing it with recoverable amount with its carrying amount every year, that is annually. Whenever there is an indication that intangible asset may be impaired, then it is to be tested. Means annually it is required, but in case of indefinite useful life, as the index itself says, index 36 itself says that in case of indefinite useful life, impairment testing is required to check whenever there is an indication that the asset may be impaired. Retirement and disposal. An intangible asset shall be de-recognized on disposal when the asset is sold, or when the intangible asset shall be de-recognized when in case of disposal of the asset, when no future economic benefit are expected from the use of or disposal, when the future economic benefit from that asset is not expected, or there is no future economic benefit from that asset, so it should be disposed, or there is no use of that asset, then it should be disposed of, and it should be de-recognized from the book. The difference between the net disposal the consideration which the entity get, and the carrying amount which is in the books, the differential amount is the profit or gain, and it should be recognized in the PL account as profit and loss from the sale of the asset. And it shall not be classified as revenue. Thanking you for watching my video. If you like, please subscribe, comment, and share my